In May, the stock market just got obliterated as everyone freaked out about the heightened trade tensions with China. In June, the market came roaring back as we realized that the Federal Reserve was poised to cut interest rates, and there might be some sort of resolution to the trade war. So, look, that's past tense. Where are we headed in July? Tonight, we're going off the charts to answer that question with Carolyn Boroden. She's that brilliant technician who runs the FibonacciQueen.com website. Also happens to be one of my colleagues at realmoney.com, where I blog every day. When the averages started pulling back in early May, Boroden told us she expected more pain, even though she was still long-term bullish. She nailed it. In fact, when you look at the daily chart of the S&P 500, you can see the Fibonacci Queen's methodology work all over the darn place. For example, she always tells us to watch out for what's known as the 5-13 crossover, when the 5-day exponential moving average crosses below the 13-day exponential moving average. And that's a sign that a correction may be at hand. And we got exactly that on May 8th. Take a look. It's pretty interesting. And the market continued to get clobbered. From the highs in early May, the S&P eventually shed 225 points. Fib Queen, you nailed it. So why did the pullback end? All right, we've talked about the fundamental reasons constantly, but how about the technical ones? Boroden's called the Fibonacci Queen for a reason. Her methodology involves looking at past swings in the market, past swings in a stock, past swings in an index, and then running those swings through the prism of Fibonacci ratios. That's an important series of numbers discovered by the medieval godfather of mathematics. His name is Leonardo Fibonacci. Do you know he actually lived in Pisa in the 12th century? Exactly where they built the Leaning Tower. I just thought it was worth putting that in. To find important levels where that security might change its course. This applies to both the y-axis of the chart, which is price, okay, and the x-axis, which is time. Remember that course? So Boroden's always searching for little clusters of Fibonacci price relationships and Fibonacci time cycles. In early June, we got a whole cluster of these timing cycles coming due on the 3rd and 4th. Whenever that happens, she expects a possible reversal of whatever the market's doing. If we're falling, we go higher. If we're rallying, we go lower. Sure enough, again, amazingly, that's exactly when the S&P bottomed, and we got a beautiful rally. With the 5-day exponential moving average crossing back over the 13-day, I already marked it in green, but I thought it was important to do that. And that's Boroden's trigger that tells you it's time to buy. The moment that happened, well, she knew the correction was over just by looking at the charts and the Fibonacci ratios. So where do we go from here? Well, even after the monster run last month, Boroden thinks we've got still more upside. Check out this new version of the S&P 500 daily chart. The Fib Queen's shooting for still higher upside targets based on her usual methodology. The first one is at 3,015. Up less than 2% from here. That shouldn't be a difficult hurdle to jump. Her next target comes in at the 3,093 level. That's to the 3,102 level. That's up a little more than 4%. And if we can break out over that level, the S&P, she says, could go to 3,308, which would represent a fantastic 11.3% gain. What a year that would be. That sounds darn good. However, Boroden also notes that we're flashing right now a cluster of Fibonacci time cycles that fall between yesterday and the 4th of July. And like I just told you, when an index hits a bunch of these timing cycles, well, guess what? It means we're in for a reversal. So while Boroden likes where we're headed long-term, obviously, I mean, this would be incredible, right? Right now, the chart's telling you to anticipate a little, let's say, pullback. Maybe later this week, tomorrow, Friday. That said, she'd be a buyer into weakness. Good opportunity. You just need to learn from the recent past year. She'd only be a buyer so long as her sell trigger doesn't fire, meaning as long as the S&P's 5-day exponential moving average holds above the 13-day. If we get a bearish crossover in these two, she'll become more cautious until we get another set of clear Fibonacci signals that predict a bullish reversal. Ultimately, Boroden thinks we'll see much higher prices from the December lows, and that is quite the contrary to all these bears that I keep hearing on TV, or like faux bulls, I guess is a better word for saying. But we might experience some turbulence along the way, and she warns that the turbulence might be coming very soon. All right. If you understand what's driving the S&P 500, why don't we consider one of its largest components, something I talk about constantly. Yep, you guessed it, Apple. Every time investors wrote off Apple's prospects, what did it do? The stock came roaring back, which is how the stock is now back a couple of bucks over 200. You know why I'm a believer in Apple. Even though the company is caught in the crossfire of the trade war, one of the few large operators that had the potential to be shelled by both sides. company is transforming itself into the world's best consumer goods play with a fabulous razor blade business model where they sell you the phone or the watch so they can make money charging you for various subscription services for years and years. I sure wish they'd start explaining the story just like I said in terms of the lifetime value or LTV of their subscribers, because that's what's going to matter, not the handset sales. That is the conclusion of a much thought that I had, just like I kind of dreamed up the whole service revenue thing. But what about the technical side? Take a look at Apple's daily chart. As much as it's already run, Boroden says that if this stock can clear its current hurdle resistance at 205, and we are right there, she sees a lot more upside. In fact, her methodology suggests that Apple could run to $227 and maybe even $243. People are talking about all-time highs here. Once again, though, if the 5-day exponential moving average crosses below the 13-day, all bets are off. And I know you hate that like buy high, sell low thing, but she's been right. So let me give you the bottom line. The charts, as interpreted by someone who's been very right for our show, Carolyn Boroden, suggests that both Apple and the broader S&P 500 have more room to run, maybe much more, but that the next few sessions might get a little dicey. So long as we don't get a bearish 513 crossover, she thinks you could safely buy into any weakness, which would mean when all the action's really thin on Wednesday and Friday, it sounds like as long as it doesn't get down too much, buy. I like it because it's unemotional. Why don't we go to Christopher in Pennsylvania? Christopher!
Dan, how are you? Big booyah from Philadelphia.
Well, there we go. There we go. I like, Hahnemann Hospital just went bankrupt. How about that? Wow. All right, go ahead.
I'm a college student, first-time caller. Wanted to ask about JD.com, ticker JD. It's been on a solid run recently. It's up about 20% this month. Curious what your thoughts are for this one, considering the recent trade news with China.
Right.
Do you think I should hold or sell it?
You know what? I am, Peter Navarro was on our channel this morning, and actually people call it network. I'm so old, I call it channel. And he told a bullish story about how the talks are going well. So I guess you can stay with it. It's not my fave, but you know what? That whole market is lifting all boats. Let's go to Beverly and Les in Arizona. Two for one. Where do you go? Let's go.
I'm Beverly.
And I'm Les.
All right.
So we bought Cloudera last October at $14.71 a share.
Yeah.
And I think we should now sell it and buy like AMD instead.
And I think that we should hold on to it. And Les and I have a $10 bet going on here. It's up to you to see if I win the $10 or less. Can you give us your take on this?
I would not sell it down here. The combination had so many prospects, but it failed to deliver. I agree with Les that AMD would be better. But I have to tell you, the more I think about what Beverly's saying, I don't want the loss taken right now. It can't be this bad at Cloudera. I think, I have to tell you, maybe I'm splitting the baby there, but that means kind of both are right. But Cloudera was a mistake, and you're not going to go wrong with AMD. All right. Listen up. The chart suggests the next few sessions are going to get dicey, but then the S&P's headed higher. So maybe this is the opportunity. Much more mad money yet. President Trump softened his stance on Huawei, but which companies could see the benefits? I have not seen these names anywhere. We've got them here. Then I'm taking you inside the world of fintech, and I'm telling you about a stock that might be worth considering. And all your calls, rapid fire, tonight's edition of the Lightning Round. So stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.